good evening, everybody. You're welcome to today's technical market forecast for the 24th to 28th of June 2024 with Great White FX. And as always, we are going to start off with the economic calendar. Next week, we have some high impact news. Monday is going to be calm. Monday doesn't have so much heavy news. But Tuesday, we have high impact news coming in on the Canadian dollar and the US dollar. Wednesday is going to be a little bit calm, apart from the Aussie dollar CPI. Thursday is going to be a little bit high impact news field because during the London session, the Bank of England's governor is going to be speaking. Then by 1:30, we have final GDP on the dollar, unemployment claims, and all these other news. Then by 3 p.m., pending home sales. And then Friday, we also have some high impact news on Friday. So that's out of the way. Let's get down to what we have going into this new week. So as always, we're going to start off with the US 100, the dollar index, the EURGBP, the EURUSD, the GBPUSD, Euro, gold, pound yen, and euro yen. So let's start off with the US 100. So starting with this pair, we're going to start off with the weekly. So looking at this pair on the weekly, we can see that we have a long upper pin bar close on the weekly, which is weakness, but it's not yet bearish because this did not close back into the range of this prior candle. So that points to the fact that we might still see a little bit of a bullish move on this before any bearish weakness coming in. And if you notice, it stayed above when they closed. They didn't close back below here because they stayed above 19677.3. So if we go down to the daily, what we have on the daily is that we have a bounce off that level, which was a weekly structure point, a weekly swing high. So what we have now going into this lower time frame, that's a 4-hour time frame, we have what looks like a break, a retest, and the possible continuation on this pair. But we'll be watching closely because we have a change of character here. This was the low that was used to break these highs. And if this is to have continued bullish, they would not have broken it. So for now, this bullish order block down here is holding price, and that might send price a little bit higher. So you'll be watching this entire zone. If it fails to hold price, to halt the bullish retracement, then we may see price coming here. But once we get a close above 2008.6, then we might see a bullish continuation. But for now, the possibility is that we might just see a bit of a retracement here and then a move back down on this pair. So the next pair we're going to be looking at is the dollar index. Looking at the dollar index, just like I pointed out last week, at the beginning of the week, let's just take some few moments to look at it. And this is my YouTube page. Don't forget to like the videos and subscribe. It goes a long way. So let's look at the dollar index review for last week. Next we're going to be looking at is the dollar index. The dollar index has clearly shown where it intends to go. If we look at it on the weekly, we can see that we now have a break out of this consolidation, this last down candle. You see that price has been dancing within its range. So we have a close above that. And if you also notice on the monthly, we spike the monthly low and close back inside the range. So that means that most likely going forward, these equal highs at 106.50 might be the target on the dollar index. But if we're looking forward, before that on the weekly, that's on the monthly, I was looking at it on the monthly because this is the monthly time frame. This might be the target on the monthly. But if we look at it on the weekly we have this high, still same here, but we have this rejection block here at 106.10 first. So going into this new week, the possibility is that where the dollar index is, which is this cluster area, we might see a bit of a retracement. So note this last down candle before this up move. If you go down to the 4-hour time frame, it's somewhere here. So you'll be watching for price to at least retrace into this zone, this fair value gap here, into this area, then bullish evidence to continue to the upside. But if this fails, then we might see a deeper retracement into here before a continuation to the upside. But for the dollar index is clearly bullish from. So let's look at what the dollar index did. So if we look at it for last week, you can see price came into that area that was forecasted, and we can see the bullish move. So now going into this new week, if we look at this price from the daily time frame, if we pick this high to this low that was broken, price is this day 50%. That's the equilibrium of the broken range. This pair is still bullish. There are several things pointing towards it. Apart from the fact that it has broken out of the range, if you notice on the weekly, it closed above the previous week high. If we go down to the daily, not only did it close above this high, it closed above this high, but just spiked here. So we might see a bit of a retracement going into this new week. But if we come down to the 4-hour time frame, you'll be watching this 4-hour fair value gap and this structure point here. That's where you'll be watching for a retracement, bullish evidence, run to the upside, first towards 105.95, 106.11, 106.22, then before this high at 106.49. So those are the possible targets to the upside, but we might see a bit of a down move first before a continuation to the upside. So we're going to look at the Euro USD. No, this week we're going to start off with the Euro Pound. So this is important because this gives a bearing for the Euro or the Pound strength going into the new week. So as a trader, you need to be aware of which is stronger of the two. So that will help you pick out the best rates between maybe pound and pound dollar, euro dollar, or the pound and other crosses, or the euro and other crosses. So if we look at this pair from the weekly point of view, we have what looks like an inside bar on the weekly. You can see we have what looks like an inside bar on the weekly after price swept this monthly rejection here. I noticed thing close by below it. We go back to the daily. If we look at the daily, this level here, that is 0.8458 is a very important level. It's a key level you want to watch out for. Once we get the body close above here, the possibility exists that we might see price come into this higher weekly fair value gap. But since we don't have it now, we'll go down to the 4-hour time frame. Price is showing a bit of a bullish continuation. We'll notice on the 4-hour time frame, this swing high, we have a close above it. And that lines up with a weekly fair value gap. Let's go back to the weekly so that we can identify where that weekly fair value gap is. That's previous week's high, which has created a fair value gap between this point and this point. So this fair value gap on the weekly is a weekly fair value gap plus the previous week's high. So if we go back down now to the 4-hour, the possibility is that this might still move back down. But if you look at this, it's trying to make new highs, which points to the fact that going into next week, possibility is that we might see something like this and the continuation to the upside. This is going to become clear when we move into the Euro USD and the GBPUSD. So if we look at the Euro USD, we're going to start off from the weekly. If you notice on the dollar index closed above its previous week's high. this did not close below its previous week's low. It didn't make a new low as the dollar index made a new high. Now, that's aside. If we go down to the daily, notice that the daily has a long lower wick. What this points to the fact that we might see a bit of a retracement. You'll be watching this 4-hour fair value gap and this daily fair value gap here. So we might see a retracement, a bit of a steep retracement into this level, rejection, and a move lower on price. So that's what we'll be waiting for on the Euro USD, provided price does not sweep 1.0667 first. We wouldn't like to see this sweep first, as this might serve as the draw on liquidity. So we like to see this move inside this range, then move back to the downside. So the next one we're going to be looking at is the GBPUSD. If we look at the GBPUSD on the weekly, you will notice that it closed below its previous week's low, which is in line with the dollar index. So that shows that this is weaker of the euro, that the pound is weaker than the euro. So what that means is that if this dollar should continue showing strength, the pound USD will be a better option for a short than trying to sell the Euro USD. So we can see this on the weekly. We have a close below the previous week's low on the pound dollar. If we go down to the daily, we have a long upper wick also. So which points to the fact that if we go to the 4-hour time frame, the possibility is that we might see a steep retracement into this daily fair value gap here. This daily fair value gap between 1.2674 to 1.2700. So we might see a steep retracement in here. If we get bearish evidence, then we might see price come for the consequent encroachment of the daily fair value gap. Because if you notice, it's sitting above the consequent encroachment now of the weekly fair value gap. So that might cause it to bounce. Then if it gets rejected from this daily fair value gap, we might see it come for the consequent encroachment of the daily at 1.2617 before moving lower to 1.2594. So the next pair we're going to be looking at is gold. Just like we pointed out on gold, let's just briefly look at our outlook for gold last week. Looking at is gold. Gold is still bearish, but this low, let's look at it on the weekly. We see this is what we have on the weekly, but this pair is still bearish. We have this massive engulfing on the weekly, which points to the fact that we might see steep retracement going into the new week. If we look at it on the daily, this low was spiked by Thursday's candle. That was why Friday did this. So which means that most likely price might be coming for 23.41 first, then this before it continues to the downside. So it's bearish as long as price stays above 23.88. So what does that mean? If you go into the 4-hour time frame, it means that you might see a bit of a down move first and a continuation to the upside. So this pair might retrace down a bit before moving to the upside. So that's just what you need. So if we look at this pair now, on that 4-hour time frame, this is where we were. And see price retrace as forecasted, then almost filled this 4-hour fair value gap to the T. So what this means now going into this new week is that the possibility is that we might see a bit of a retracement. We'll be watching this last down candle before this up move. This last down candle before this up move, we'll be watching for price to get in here. If price gets rejected here, then we might see price come for 1.2306. Then if it moves lower, we'll be seeing 22.95. But if this area fails, then we might see price come into this higher fair value gap here on the 4-hour. So the gold is bearish, but we might see a bit of a retracement to the upside before you move back to the downside. That's what we have on gold moving into this new week. So the next pair we're going to be looking at is the pound yen. This pair is clearly showing its strength And from what I see, it's going to first go for 202.12. The possibility is that it might retrace. I would advise if you wait for that retracement. If you wait for that retracement, as long as price stays above 200.50, you wait for bullish evidence, then your target will be 202.12, 202.81. Those are the most conservative levels going into New York. But for now, the pound yen is still bullish. The last but not the least is the euro yen. This pair seems to have woken up, and most likely it might be gunning for this high at 171.60. So you don't want to take a long position here. You need to wait for a retracement, probably into any of these 4-hour fair value gaps. Then if that happens, you're going to be targeting 171.05, then 171.60 conservative. So that settles it for this night. Is there anybody who want me to look at? So in the absence of that, I think I'm going to wish
I'm not so clear about the gold. Hello?
About the gold.
Yes.
The gold.
It went down so much. Does it mean it's going to retrace?
Well, if you look at gold from the higher time frame, just like I pointed out, gold is bearish. If you look at gold now, gold is bearish. There's something here you need to notice. You see this far, this thing, it just came very close to filling it. You see, very close. This is the impulse. This is the retracement. Yes, that far fair value gap. If you look at it on the daily is a massive engulfing candle. A very massive engulfing candle. Although it's within this other block here. So that might cause it. That's why I say you might see a bit of a retracement. But it's still within the body. If you notice, there is this massive candle here. That's where price is still within the range. So it's still retracing within this. But for now, there's been a massive rejection. So if you go down now to the 4-hour time frame.
Sorry, excuse me. Can we
Yes.
look at it? Are we going to consider it a master candle on the daily?
That big candle is a master candle already.
Okay.
This is a master candle already. 1, 2, 3, 4, 5. You need a minimum of 4 candles to create a master candle, and you already have it. So the deal with this is that whichever direction this breaks, it's going to do almost the full range of that break. So from here to here is almost 10,000 pips.
Wow.
It's almost 10,000 pips. Let me be sure. From this high, yes, it's almost 10,000 pips. At this point, it's 500. So whichever direction this breaks is going to do that move in that direction. So if it breaks to the downside, you'll be seeing it coming down here. If it breaks now to the upside, you're going to see it come up to this place first, then take out these highs. So that's what you're going to be looking at going into next week. So for this pair, there's something I wanted to point out on this pair. If you look at this pair on the 4-hour time frame, now this low didn't make a solid new high. And if you look at all this low here, this low didn't make a new high. It didn't make a high above here. And now there's a retracement. Now, there's something here you need to notice. You see this high. What do you notice about this high here at 23.65? What do you notice there?
It shows a bearish signal. That one is higher. The two of them are.
Price on the 4-hour time frame, there was massive rejection there. Price couldn't close above it. That in and of itself is a warning that if that low couldn't make a serious new high, price is going to come basic. Okay, they've taken out this low on the 1 hour. But if you go to the 4-hour time frame, where I'm basing it, they might be coming for this low. Because this is the
For which one?
origin for this low here. That is 2306. And it may be in order because that might be, this is liquidity, this is liquidity. So they might sweep here,
Which one
sweep
did
here.
you take out? You said you didn't take out the high.
This high at 2365. Look at it. Do you see a close above this first high?
Okay, no, body close, no.
That means that puts this low on that target. This first order block has been removed. This has been removed. This is now where price is. So the possibility is that you might see a retracement into this area here. If price gets rejected from there, then it's going to go for this low and probably come down here.
I think there's a lag in the pointer because I don't understand which way you're talking about.
You can watch the video on YouTube. I'll post the link. Okay. So you can watch it on the YouTube. So don't forget to like and share. Don't forget to subscribe, like, and share. So I wish everybody a beautiful weekend and a lovely trading week ahead. So good night, everybody, and thank you for attending.
Good night.